Hello, everyone, and welcome to this evening's session on stock trading and investing. Apologies for the delay, but I had a few problems, various technical problems. And in fact, David and I haven't even tested our audio. So I'm going to ask him, can you actually hear me? Oh, fine, fantastic. If he can hear me, I know you can. Thank you so much for taking the time out to join us. That's myself, Anna, and my husband, David. I know some of you looking down the list of attendees were with us last week, and some of you this is your first time coming along, so you are more than welcome. But before we start, as always, may I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading and investing can be a very risky business, so please don't ever think of using money that you cannot afford to lose. Okay, let me just put that down. And really, where shall we start? We've got several topics for you today, obviously looking at some charts as well. But I thought it'd be interesting to start with what's actually happening in a general sense in the markets, because I think it could kind of be summed up as a bad day for good news, basically. And the reason for that is the markets have gone down, although looking at the SPY, there has been a degree of recovery. Apple has had a bit of a reversal of fortunes based on some news out of China, saying that the government, I think, is banning their workforce from using Apple phones at work. Market certainly didn't like that. That certainly wouldn't have helped the tech sector, because Apple has a big percentage in that sector, and the tech sector has a big percentage of the S&P 500 and obviously the SPY. The good news, on the other hand, was what is known as the ISM, which is the PMI, which has come out. You can see the numbers here at above expectation and certainly above 50. 50 is like an inflection point. So why is the ISM PMI, why is that important? Why is the market paying attention to it? Well, for a start, anything over 50 is pointing to the fact that the economy is actually doing quite well, because the PMI is constructed. It's a survey of purchasing managers in leading companies, and they're asked all sorts of questions about business conditions, employment, etc. And if they give a very positive result, it kind of tells you that the economy is very resilient. Now, and that should be good news. Of course it is. You've got a healthy economy. The trouble is, it's come at the wrong time, because what the Fed wants to do, it wants the economy to slow down, not so much that we have a recession. Hence this expression, a soft landing. Now, that has happened in the past, and I had to look this up because I just wanted to double check that, whether in fact they had actually ever achieved it. And apparently it happened in 1994-95. So it's not unheard of. You'll read all sorts of comments about where this is all pie in the sky stuff, because there are so many other issues out there that just will not allow that to happen. The main one being that we still have high inflation. So, and also the PMI is considered a leading indicator. So that is the good news. That then led to a rise in bond yields because of this connection, obviously, with inflation. You've got a healthy, economy firing on all cylinders. Then you could possibly have inflation. Inflation is going to be more difficult to tackle. Added to that, the oil price has been rising, and oil prices can be a driver of inflation, and that's the last thing you want. And that's because the Saudis, and I think the Russians as well, have decided to cut their supply. And in the States, where you have a special reserve, you have it's the reserve for gasoline. That, in fact, has not been replenished. If you recall, I think last year it was used to keep the cost of gasoline down. And you've got politics in it as well, but politics from the OPEC side, the oil producer side, but you've also got the election next year in 2024, which I know seems an awful long way away, but it'll be upon us sooner than we think. And we've got an election here in the UK, so inflation is already a very, very sensitive, a terrible problem for many people, and now you have the threat of even more coming from higher gasoline prices. So it seems a bit of a contradiction. So you've got this PMI, which is supposed to be a leading indicator, and at the same time, you've now got rising oil prices. And as a trader and an investor, oil prices is really something that you need to keep somewhere on your radar. The best way to do it is via the ETF, which is the USO. And when I pass over to David, he's going to show you how we've put together, if you like, a little sentiment, a little group of ETFs, a group of instruments that you can keep an eye on using one of our new indicators that you can have on your screen, and you can have it on any time frame, and that will tell you what is the sentiment at that particular time, because you are referencing these cross-market instruments and markets of which oil is one. And the other thing with the oil price, which makes me and David and a lot of people we know extremely cross, because this inflation that we're having has there's lots of reasons, but one of the prime reasons has obviously been the energy. I know we've had the issue with there's a war going on in the Ukraine, and the thing with Russia, but it's a supply thing, and it could have been handled better. That's in our humble opinion. Our heating bills were absolutely astronomical this year, as probably they were for you as well. So this is the kind of background we have at the moment, hence the reason why we're looking at the heat map that we're seeing down here, and it's not looking terribly healthy. In fact, I've got a better one here, which is the full one. Very, very patchy, some big falls in companies that actually have, as I said, a big percentage, a big holding in not only the dominant sectors in the S&P 500, but also have a dominance in that sector as well. One of which is Apple. Microsoft has not done very much. These are the two biggest ones, Microsoft and Apple. Always be aware of what their holdings are. Tesla's had a bit of a fall, and so has Nvidia. And those of you who were with us last week, there's been more coming out about what, a bit of moody goings on surrounding the earnings to do with Nvidia. And I think it's a story that's not going to go away. The rest of the week, we have some employment data tomorrow. Employment is another, it's one of the Fed's mandates that they are tasked to look after. We've got the unemployment data coming in, and if you have a strong a strong labour market, that too can feed into the inflation narrative. And that's why we keep an eye on the bonds, because the yields tell us what is going on, what is across the maturities, not just the short-term ones, but the longer-term ones as well. And tomorrow we also have the oil inventories, which will be interesting. Normally they come out on a Wednesday, but because it was Labour Day on Monday, they're going to come out a day later, and that will tell us what the reserves are at Cushing, and they're the numbers that the market watches. And it breaks down into aviation fuel and all sorts of things. And David and I, we used to do a lot more in oil a few years ago. We haven't been, other than keeping a close eye on it as part of our, if you like, cross-market analysis, as it were. We don't trade it as much as we used to. And I think quite honestly, looking at, given that we've moved more into the stocks and the ETF space, the USO is certainly one that would be worth looking at. You could even do it using options, basically. But if you know the background, that will give you that little bit of an extra edge, as it were. So that's the kind of background we have at the moment. So moving to the charts and looking at the SPY in particular, what I have here, I've got two workspaces for the SPY, and I have this for the SPY, the Qs, and the individual stocks as well, where I have the weekly, the daily, the hour, and the 15 minutes. And the reason I do this is for my support and resistance levels, because VPA, those of you who use it, who've read the books, who have some of our indicators, who've come along to these sessions, will know the volume price analysis is premised on the relationship between the price action, the volume, support and resistance, the candles, the candle patterns, and obviously time, and not just the time frame that you're on, but also multiple time frames. And as we stress every time, and I think we'll do this until the cows come home, you've got to be aware of the levels that are on the different time frames. I'm not saying you can go through all of them, but certainly be aware of the daily, particularly if the price is already in that region. If you use the volume point of control, is the price action at the volume point of control? Is it a congestion? Is it looking to break out? And even up to the weekly, and then the hour, and the 15, and then down you go to the faster ones. And what I've done with the faster ones is I've actually taken the hourly as the benchmark, if you like, because I'm down on the minute, the 2 minute, 3, 5. I've got the 15 here, which is a really, really nice example of today's price action. So although it's been a bad day for good news, as it were, we have actually had, in the last couple of hours, we've had a really nice reversal that we can see here on the 15-minute chart. Now, whether the market has suddenly said, well, actually, in some ways the market is thinking, regardless of what happens, the Fed's kind of got their back, because it's done so in the past. It did it with QE. When we had the issues with the banks, the regional banks, the Fed stepped in. It's almost as if they're kind of a hostage to fortune, the Federal Reserve. They do get an awful lot of bad press, but at the same time, this business couldn't function without them, basically. And at the same time this week, we do have an awful lot of speakers around. They will be shutting up soon, because 2 weeks, we've got the FOMC, and they have what they call the dark period, where they're not allowed to say anything, I think 2 weeks before the actual meeting itself. They all go off in a little huddle. So make the most of listening to what they say. And as always, the ones that carry the most weight are the members that actually have a vote on the committee. I've got the 5-minute chart down here, and I've also got the minute chart, but I'm not going to look at the minute or the 2 or the 3, because I'm going to leave that to David, because he will talk you through how we also use our new volume indicator, what we call our volume pressure indicator. Some of you were with us last week, because it's another way that we have found to be able to interpret the volume bars that we see on our charts. But to go to the 15-minute chart here, I mean, it's just such a really nice expression. I mean, obviously, you've got the pre-market. The market really didn't do very much. But in the pre-market, what it did, it created these levels, as I said, these levels of resistance and these levels of support. It was essentially in a very narrow channel. Sometimes you get that, sometimes you don't. It all depends what is going on in the futures market, which is another suggestion that we have, is that if you are going to be trading the SPY, or investing, not so much investing, but trading in the SPY, then certainly be aware of what's been going on in the futures on Globex, because some of the time important news comes out at well, it's 1:30 our time, and that's an hour before the Wall Street opens. And if it's particularly an important piece of news and it has a big effect on the market, that is going to impact what happens at the physical open. And what we have here at the physical open, what do we have? It closes down, then it has a wick to the bottom of the candle. We have volatility triggered, but really not a massive amount of volume. We have the price retreat within the spread of the candle, and in fact it gets to, as I said, that resistance, that support becomes resistance. Then we have the resistance, didn't get through there. And in fact, we have quite a nice sort of waterfall. We've got a weak candle here. We've got rising volume. It's always going to be a little bit, the volume you see at the beginning is always going to be more than, it's going to be a bit distorted because you have this inrush at the beginning. So we always say, let it settle down, see what happens. With regards to entries, that's when you would look at the faster time frames. The 15 minutes, I just want to show you as an example of what you're looking at from a VPA perspective. But this could be your benchmark chart. You might be on the 5-minute chart and you would be using the 15-minute to give you an insight, as I said, to these support and resistance levels. But other than the two at the beginning, we really didn't have very many until we got to, here we are, 445, in the 445 area. We have a weak candle here. We've got a decent amount of volume, but it's got a wick to the top of the candle, and wicks are really, really important. And I'll explain also why when we look at the daily chart and also on the chart for Tesla today. So you have a wick to the top. Obviously the price went up, but it's come down. It's weak and it carries on lower. But these two candles are then quite interesting because that's a reasonably spread candle. That's one there. This one is smaller than that one. It's okay. It has a wick to the top, but it has a little wick to the bottom as well. But it's on higher volume, so it is kind of anomalous. And you think, yeah, that's maybe there's support coming in. It's going to reverse. I haven't got all the time frames up at the moment, but you would look at other time frames, and I suspect, in fact, I know there are some support lines there, support lines that are drawn by our own proprietary indicator, which is this one, which is what we call the accumulation and distribution. But it could be a moving average. It could have been a Fibonacci. It could be a Camarilla. I don't have Camarilla on here because I just want to focus on the price action, the volume, and with the VPOC and the accumulation and distribution. And this is really the first example, a really strong example of what we are looking for. So supposing you'd missed all this and you think, oh, okay, well, I think it's going to reverse, but actually it's going to, but when's it going to stop? And this is really where VPA comes into its own, which I think it is unique. When we get these pullbacks, a lot of traders would be thinking, because the markets are although we've had a bad day in inverted commas, we're not really in a bear market, until we have a complete washout. It's still looking positive, as it were. It doesn't look as though it wants to fall. This is what you want to see to give you the confidence to say, no, this is not going to reverse higher. And you simply look at what the volume bars are telling you down here. The 15-minute is not as noisy, if you like, as obviously the 1, the 3, and the 5. So they're easier to spot, if you like. And what you have is an up bar with a decent amount of volume, and then you have this volume, this bar. It's even got a wick to the bottom, and you think, oh well, there must be a bit of buying in there. But look at the volume. That is a classic VPA anomaly. And even if you just focus on looking at this one anomaly and really getting to know it, it will really transform how you trade. And it's probably the one comment that I get the most of on my Twitter feed is that when traders begin to recognize these, that's when everything transforms for them. The downtrend continues. Now we want to see it in reverse, because what are we seeing here? We are seeing falling prices. We are seeing falling volume. But look at this candle. Again, a classic anomaly. We have a narrow spread. We have a wick to the bottom of that candle. And we know, first of all, that there must be stopping volume in there. For whatever, the buyers are stepping up from wherever they may come from. They are there. And then it starts to go higher. As always, wait until the next signal, because the next candle, although it is a positive candle and it's got a nice wick to the bottom, you have to remember when that candle was forming, that was a down candle. It was only in the last minute that it then became an up candle with that drive up with the wick and the volume. And that's where it's been reversing, because you can have a situation where you see this lovely anomaly, but there's no follow through for whatever reason. Maybe it tries to follow through and it may hit a significant resistance level on another time frame, hence the reason for using multiple time frames. Now, obviously, we're coming to the end of the session, but it has been the sort of day that we say in Forex. There has been some great two-way price action. There was an opportunity to the downside, spot the anomaly, that little bit of price action down there, nice reversal here, and up we go. And of course, if you don't mind using the slightly slower, in inverted commas, I mean slow for the this is slow for the for the SPY, for the S&P 500. The 15-minute can do that. Now, you're not going to get it every day. If you look at yesterday, what did we see yesterday? There's a lot of choppy price action. We pray for days like this. In here, when it's like this, there are opportunities, but then you would have to go to the faster time frames. So what I'm also saying is recognize the type of price action that you are in. Are you in a congestion, or are you in a very, very discernible trend with the anomalies coming up to tell you that that trend is going to continue? And obviously, coming now to the end of, we're coming towards the end of the physical session, and there'll be the aftermarket as well. But I just thought it was a really beautiful example of our VPA methodology. What I was also going to look at is Tesla, because yesterday, if you follow me on Twitter, you will know I put up the heat map and also what the SPY was doing. I also put the RSP up yesterday, which was it is the equal weight version of the SPY, and it had a real down day yesterday, but volume was falling, and today it hasn't followed through. It's gone down, but not as much as that just the price action alone would suggest, which is encouraging. But what I said about Tesla, if I could just find the thing, you've really got to love Tesla. Tesla is one of these stocks that, in some ways, it doesn't matter what the media writes about it. It has some very, very passionate traders, investors, and backers, and has taken it to to its heights. And they get very, very cross if anybody says anything nasty about it. And yesterday, it was actually the best performer. It was just a complete. We've had a 2-bar reversal. Again, back to levels. It actually pushed it back to the volume point of control. But in all seriousness, great news as though that is, because it's gone to the volume point of control, it's now got to really push through, and that's going to take a bit of effort. And then you have some pretty serious resistance levels above. That doesn't mean it can't do it, but no matter how passionate you are about a stock, you have to be realistic and look at what is on the chart, because a pullback or a correction for any stock is a good thing, because it means that if you want to buy, you're going to get a better price. When is the best time to buy? You want to buy when everyone has finished selling. I mean, this is a good example here. Another VPA signal anomaly. There are so many of them. There's these three candles. Nice big up candle, really squashed candle. Couldn't go any further at the volume point of control. Is it any surprise then that we saw this this down candle yesterday? I mean, trading is all about being happy to take positions both sides, long and short. So that's what I wanted to say about Tesla. I think that was what else have I got here? In fact, I got let's see. I need to bring my charts up, but I don't think they will. Let's have a look. That's the RSP. Yes, and this is what I said yesterday. That again to levels at 446. Let me see where did it go? Did it crash through 446? Let's have a look quickly. Yes, it did. It didn't. 446 didn't actually. Here we are. Isn't that interesting? 446 was actually where it tried to rally to, and then it came down again, and we're down to 443. And then we go back up to got the weekly. Let's have a look at the daily. Yes, so the daily chart's quite interesting because volume is kind of fairly consistent at the moment. But what's encouraging is it's actually got this wick to the bottom of the candle. When markets don't want to fall, or they want to go up, they want to stay bullish, you will find an awful lot of dip buying. And that is what we call dip buying, which is the wick to the bottom of this candle. It'll be interesting to see how the rest of the week plays out in terms of the news that we have. Just a quick tip. What I've done here with Trading Economics, I've mentioned this calendar before. You can actually select the countries for which you would like the economic news. Trading Economics is very comprehensive. So, and when you get the bold, that is an important item of news and very likely to cause a reaction in the market. So, what's it looking for? Well, we've got Harker tomorrow. I think Harker is a voter. As I said, we've got the inventories tomorrow, down at Cushing. And we've got this employment data here, which is broken up, and this is what I mean by the futures. This is at 1:30, which is before the Wall Street Open here in the UK. For us, it's 2:30 in the afternoon. So 1:30 is an hour before, and that's clearly going to have an impact, which is why it's important to look at the future. What they also do, they do a very nice news. I know you can get news on all sorts of other feeds, as it were, but they do summarize it really well. And this is why Treasury yields, they actually rose after the ISM. And listen to what the Fed's members are saying. Right. If you've got any questions about what I've said, or anything that I say or David says, please just put them into the chat box and we will be happy to answer them for you. Sorry, apologies. There's one other thing tomorrow, one other piece of news which is quite interesting, and it's the 30-year mortgage rate. Housing, buildings, mortgages, etc. They are a really big part of the economy of most developed countries, certainly in the States, and they certainly are here in the US. If mortgages become unaffordable to a big section of the population, that's going to affect house prices. I meant to look up what percentage does housing have as part of GDP. In China, it's a huge amount because that's what they've kind of built their economy on. I know they've gone into this, make things more cheaply than everyone else, but a great part of their GDP is housing and property, and that is causing it's in all sorts of trouble. When you have a section of the economy that has a big part of the GDP, and you start having higher interest rates that feeds into higher mortgage rates, causes a crisis for people that can't afford their mortgages, can't afford to live. Then everything could spiral out of control and unravel. And that's without the commercial real estate. I'm just talking about housing. So the 30-year mortgage rate will be interesting to watch and just see how the market responds. And it's also a great example of the 30-year mortgage rate 3 years ago, 4 years, no one would give it house room because there wasn't any inflation. No one said, yeah, 30, what was it, 3%, 2.5%? Now it's 7%. So economic news, fundamental news, it has a cycle, and it comes to prominence at different times of the economic and business cycle. Just something to be aware of.